Walk into almost any super shop in Dhaka, Shopno, Unimart, Agora, or any other, and you'll still see 3 or 4 QR codes taped to the same counter. One for bKash, one for Nagad, one for a bank. The customer has to find the right one before they can pay digitally. Sometimes they have to transfer money from bank to their MFS to pay for the services. Bangladesh Bank has decided that it ends now. Under the new Bangla QR mandate, every bank and MFS provider has to retire its own proprietary code and replace it with one single interoperable standard, accepted by any app at any shop everywhere in the country by 30 June 2026. And even the businesses need to have Bangla QR mandatorily to renew their trade license. I'm Kashfi Bint Hassan, an analyst at Lion City Advisory, and in this video, I'll walk you through what Bangla QR actually changes, the macroeconomic logic behind it, and why, underneath the compliance language, this has quietly turned into a race between the MFS providers themselves. Let's start with what problem this is actually solving. Bangladesh run on cash. Printing, securing, and moving physical currency costs the country real money every year. And a cash-heavy retail economy is also a low-visibility economy. Transactions that never touch a digital rail are transactions Bangladesh Bank can't see, can't tax efficiently, and can't use to extend credit to the people partaking in them. The last point is the real price. Most of Bangladesh's micro merchants, tea stalls, vegetable sellers, rickshaw repair shops operate almost entirely off the book. No transaction record means no credit history, which means no access to formal lending, no matter how reliable their actual cash flow is. A QR sticker that captures every sale turns an informal merchant into a documented one. That's the macro bet here. Digitize enough small transactions and you don't just reduce cash handling cost, you bring a huge slice of informal economy into a system that can eventually lend to it, tax it sensibly, and measure it. Bangla QR is a delivery mechanism for that bet. It's interoperable by design. Any participating bank or MFS app can scan the same code, and it costs the customer nothing. The merchant absorbs a regulated fee. That fee cannot legally be passed on to the buyers. Now here's what it gets interesting. Because interoperability is double-edged sword. For Bangladesh Bank, interoperability is the entire point. For the MFS provider, it's a threat to the traditional business model that built them. If you talk about bKash, Nagad or Rocket, etc., they make a large share of their money from two things: cash out fees and float income, which is the interest earned on customers' balances sitting in their systems before being withdrawn. Both of those depend on customers staying inside one closed loop. The old proprietary QR world was structurally good for that, as in a merchant locked into a displaying only a bKash code was a merchant whose customers had to use bKash, cash out through bKash, and leave their float sitting in bKash's account. Bangla QR breaks that law for everyone all at once. A merchant can now accept any wallet, which means no single MFS provider can rely on cornering a shop's customer base anymore. The closed loop advantage that the cash out and flow economies were built on starts eroding. So it's likely that the largest MFS of Bangladesh, bKash, won't be able to continue their revenue growth the way they have till now. Now, if everyone loses a lock-in, where's the upside? It's in speed and in who gets to the merchant first. Here's the part that doesn't get said enough. Interoperability cuts both ways. The same standards that let any customer pay any merchant also lets any MFS provider onboard any merchant faster than ever. Because there's now one common technical rail instead of 5 competing ones. The barrier to signing up a tea stall or a vegetable seller just dropped for everyone simultaneously. Which means this has become a coverage race. Whoever physically gets the QR sticker onto the most counters and convinces that merchants to treat their app as the primary account where the money is going to be settling keeps something close to the old advantage. Even inside an officially open system, the merchant relationship becomes the new mode, not the QR code itself. And in that race, bKash starts with a real structural lead. It actually has the largest agent network in country, the deepest rural footprint, and the brand recognition that makes it obvious first download for a merchant who's never used a digital wallet before. Nagad, Rocket or Upay can compete on incentives, and onboarding speed, but they're chasing a head start that's been built over a decade of agent expansion. So 2 things to take away from this. First, Bangla QR is a genuinely macroeconomic project, not just a payments convenience. It's aimed squarely at pulling the informal economy into a system that can finance it. Secondly, interoperability removes the old lock-in, but it doesn't remove the advantage of being everywhere first. It just changes what that advantage is built from: agent, reach, and merchant trust, instead of a captive QR code. Bangladesh has talked about going cashless for a decade. Bangla QR is infrastructure that finally forces the question of who actually wins the race. For more in-depth analysis on Bangla QR and what it means for your business, feel free to reach out at Lion City Advisory. Thank you so very much for watching.